Well, as the U.S. turns a colder shoulder to China, it creates an awkward choice for Canada. Do we stay true to our closest and best ally and trading partner, or do we explore our own relationship? Jeff Nankivell is president and CEO of the Asia Pacific Foundation. Jeff, thanks for being with us.
Pleasure to be with you.
So it does feel as though there's a bit of a chill on China these days. Does Canada have to, should it, try to rebuild a relationship with China that's separate from what's happening with the U.S.?
Well, I think in all of Canada's relationships internationally, we should be looking out for our own interests, and we should have our own path. It's got to take into consideration the priorities of our allies and above all the U.S. But I think Canada needs to build a relationship with China in which we can get certain things done that we need to get done. So we need channels of communication for that. But I don't think anyone in Ottawa or elsewhere is thinking about restoring the kind of tone and the feeling of a relationship that we had, 5 or 6 years ago.
And this kind of new era does seem to be reflecting the fact that we've given up on the idea that China is going to, kind of ease its way towards democracy. It is its own creature. It's going to stay that way. But do you see a path to Canadian businesses and our government forging trade relationships anyway? Is there that? Because the U.S. seems to be saying, no, we're going to treat it like almost like a new Cold War era, but with China. Can Canada do something different and find a new way?
Well, I think the U.S. is saying some different things at the same time. It should be noted that the U.S. continues to have a very large trading relationship with China, and U.S. companies, U.S. exporters are in competition with Canadian exporters in some sectors that are important to us, notably agri-food, which is the largest single portion of Canada's trade. So that's something to be taken into consideration, and Canada needs to have a stance that can protect the interests of Canadian businesses. The China trade relationship is not as important to us as it is to some other countries like Australia and Germany. China is less than 5% of Canada's export market globally. But it is still, a $30 billion a year export market for Canada. And that number has gone up slowly in the last few years, but it continues to climb. So there are Canadian businesses, Canadian farms, Canadian food companies and forestry product companies and services companies that are doing business in China. And some of them are seeing their business continue to grow. I think what you won't see is any major growth in that, or rapid growth. The businesses who are there are hoping to maintain their business there. But one thing that we know is that if you're on the ground in China, you're not seeing Canadian businesses, very many of them coming for the first time. Those businesses are looking to other markets in Asia, for example, in Southeast Asia, where there are great growth opportunities, and those markets taken all together are not small by any account.
Jeff, so good to have you for this complex subject. Appreciate your time.
Thanks for having me.
Jeff Nankivell is president and CEO of the Asia Pacific Foundation. Time for the takeaway and getting what you wish for. Canada's regulator sent a message to big streaming companies this week that soon the likes of Netflix, Disney, and Amazon will be paying a portion of their revenue to help support local programming. A 5% surcharge the regulator thinks could raise $200 million a year. Whether it comes to anywhere close to that remains to be seen. Big companies have a way of avoiding cash grabs by changing their behavior. In the case of news content, rather than pay to host Canadian news, Facebook simply opted out of the market altogether, something that not only reduced the choice for its customers, but also did little to help Canadian journalists. When it comes to homegrown content, big creators have plenty of reasons to think local if the consumers in that market have an appetite for it. Netflix and Amazon will find original creators of content in Canada, and YouTube and Spotify will promote Canadian content to the exact extent they have a business case for it. If they aren't doing it, it's not because of some weird bias. Where there might be weird bias is in the selection of content their grabbed money supports. How and who orchestrates that is yet to be seen. So to recap, some bureaucrats who want you to watch one kind of programming may unwittingly keep you from what you do want. Meanwhile, the strongest argument for this weird tax is that it levels the playing field. Canadian broadcast and streaming firms have to abide by these rules. Only fair, you say, that these new entrants play along. Well, that's one way of looking at it. Another might be to discard outdated thinking about content and cultural protection. If it ever did make sense, it makes less sense every passing day in our wired and connected world to try to gatekeep storytelling. My takeaway? Not everything should be left to the markets to decide, but some things, like the show you want to watch at the end of the day, should surely be left to a market of one. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.